Hello, my name is Rory O'Driscoll, and along with my teammates Eliza Kaplan, Thomas Costa, and Melissa Imperial, we're here to present to you our Equity Research Report on Pool Corporation as a part of Tulane University's Berken Road Reports program. Our report date is November 12, 2014. Pool Corporation trades on the NASDAQ exchange under the ticker symbol POOL. Based on our valuation of the company, our team has given Pool Corp a 12-month price target of $62 per share and an investment rating of market perform. The following will be included in our video presentation. We'll start with a description of the company, then talk about future growth potential and give our investment thesis. Then we'll talk about our team's visit to Pool Corp and give a full industry and peer analysis. Then we'll talk about the risks associated with the company and finish up by explaining how we valued the company. The company operates under three distributors: SPC Distributors, Superior Pool Products, and Horizon Distributors Incorporated. The company sells pool, irrigation, and related products to 80,000 customers across North America, South America, Europe, and Australia. Pool Corp is the largest wholesale distributor of swimming pool supplies in the United States, as well as the third largest distributor of irrigation and landscaping products. Pool Corp was founded in 1980 under the name South Central Pool Supply. In 1993, the company was incorporated as SCP Holding Corporation. In 1995, the company went public under the name of SCP Pool Corporation. In 1997, the company made its second public offering, and in 2006, the company adopted the name Pool Corporation. Incorporated in Delaware and headquartered in Covington, Louisiana, the company added irrigation to its product offerings with the acquisition of Horizon Distributors Incorporated. Pool Corporation operates on over 300 locations worldwide, with its U.S. business focused in Florida, Arizona, California, and Texas, and several locations in South America, Europe, and Australia. Since the company's incorporation, Pool Corp has endured rapid growth and expansion through acquisitions and now has a market capitalization of $2.54 billion. Pool Corporation breaks its product lines down into two businesses, the blue business and the green business. The blue business includes all swimming pool and pool-related products. The green business includes all irrigation and landscaping products. Within both the blue business and the green business, products are either discretionary or non-discretionary. Discretionary products consist of building raw materials for new pools or landscaping equipment. Non-discretionary products are those that are used in the maintenance and repair of existing pools or landscaping products. Maintenance and minor repair make up 60% of the company's business, whereas major refurbishment and replacement products make up 40% of the business. Overall, our team believes that Pool Corp has a favorable future outlook. The recovering economy should positively affect the pool and irrigation industries. We forecasted that these industries will grow between 6 and 10% in the short term and 4 and 6% in the long term. Pool Corp's future well-being depends on the competency of the company's management team. Pool Corp's intelligent management team will continue to drive the company's success into the future. Now I will explain our investment thesis. First, Pool Corp has the largest market share in the pool industry and the third largest market share in the landscape and irrigation industry, leaving them well positioned to capitalize on the uptick in new pool construction and refurbishment. Secondly, the financial crisis from 2007 to 2009 drove an 80% reduction in new pool construction in the U.S. while contributing to the decline in replacement and refurbishment activities. Improvements in general external market factors such as discretionary income in the United States will help bolster sales. Thus, the improved current economic trends indicate that consumer spending has begun to recover and a growth to industry sales will occur. Thirdly, Pool, under the leadership of CEO Manuel Perez de la Mesa, has continually proved it is a shareholder-friendly company by frequently returning excess capital back to shareholders. As earnings have improved, Pool has increased its dividend each year since the financial crisis and plans to keep increasing its dividend as the company continues to recover. Lastly, we believe the company can increase its market share through acquisitions. As consumer spending is slowly increasing, Pool Corp is confident that it can take advantage of the recovery by expanding through acquisitions. Pool Corp's business strategy has always used acquisitions to expand its market share. The company continues to look for appropriate businesses to acquire in order to penetrate new markets. In 2014, Pool Corp expanded business to Australia, which has significant potential for growth. The Australian pool, irrigation, and landscaping markets are largely untapped, giving Pool the opportunity to obtain a large market share. My teammates and I have met with Mr. Craig Hubbard, the company's investor relations officer. Mr. Hubbard emphasized Pool's competitive landscape, the recent acquisitions in Australia, and the overall impact of the economy on different aspects of Pool Corp's business. The swimming pool and irrigation and landscaping industries are highly seasonal, thrive when the economy is doing well, have a high threat of entry, have low bargaining level of suppliers and buyers, have discretionary and non-discretionary products, and have high potential to grow. Pool faces competition from both inside and outside the industry. Within the industry, the company competes against regional and local distributors, mass market retailers, large pool and landscape supply retailers, and internet retailers such as Amazon.com. The three industry competitors that we highlighted in our report were Stock Building Supplies Holdings Incorporated, The Home Depot, and Marine Products Corporation. Outside of the industry, Pool competes with other companies that rely on consumer discretionary income, mainly sellers of leisure product alternatives such as Carnival Cruises. Now, to discuss Pool Corp's risks. Pool's profitability can be drastically affected by adverse weather conditions that change the length of the swimming pool season. Pool Corp is a highly seasonal business with approximately 66% of its revenue coming in the second and third quarters of the year. Pool Corp heavily relies on favorable relationships with suppliers. The pool and landscaping and irrigation industries have low barriers to entry, so they face competition risk. Pool Corp sells chemicals and fertilizers which can be dangerous and costly to transport and store. Pool Corp is also at risk to cyber hacking due to the company's reliance on information technology systems. Additionally, Pool Corp is subject to the risk of fluctuating economic conditions, interest rate risk, international business risk, currency risk, and liquidity risk. Finally, to value Pool Corp, our team compared the company's current multiples to the following historical pool multiples: the price to earnings ratio as well as the enterprise value to EBITDA ratio. Our 12-month target price of $62 per share is fairly conservative considering Pool's current stock price of $60.36 per share. However, we believe that Pool Corp has endured a strong run recently and our estimates are in line with other analysts. Birkenroad reports are produced solely as a part of an education program at Tulane University's Freeman School of Business. The reports are not investment advice and you should not rely on them in making any investment decision. Before investing, you should consult a professional investor and/or your own primary research. Thank you for listening. We hope you enjoyed our presentation.